Well, howdy guys. It's not the most fun video in the world to talk about today. I kind of want to talk about losing $100,000 a couple years ago, guys. Losing $100,000 stock market trading. And I want to explain margin. I want to explain what margin is to you guys fully and give my side of things on why you should never, ever, ever mess with margin, because that is one of the main culprits on why I lost $100,000. There were a few different factors, but the main one was because of leverage, because I was using margin money to basically invest. And that's how we got to this $100,000 loss. Basically, I lost $75,000 in 2015 stock market trading, and I lost my wife $25,000. Combined, we lost $100,000, guys. And the main culprit was margin trading. So I want to kind of explain this to you guys today, exactly what that is and exactly why you always want to stay away from it. I kind of always do to stay away from it. I really did, because I heard the guy I look up to more than anybody, Warren Buffett. He always says, if you're smart, you don't need margin. And if you're an idiot, you have no place using it. So I always heard that and I was like, oh, I don't ever want to mess with margin. And then I did, guys. And I'll explain why it's so bad and why you never want to mess with it. And I know a lot of you guys, are going to come across this sometime and you're going to think about it. I want to give my review of it today so you guys kind of know what's going on. So margin trading, guys, let's talk about margin. And this is the main reason why I lost all that $100,000. So margin, what does this mean? This basically means for every dollar you invest, you can invest another dollar of debt. A lot of brokerages, most brokerages out there, you can, TD Ameritrade, Fidelity, Scottrade, E-Trade, any of them, they'll let you set up a margin account as long as you have a certain amount of investing experience and a certain amount of time with them. A lot of them will let you set up a margin account. So for every dollar you invest, you can invest another dollar. So let's say you got $100K in your account, okay? You got $100K in your account and that's your money, right? If you have a margin account, you can invest another $100K, okay? So now you have $200,000 you can invest, but really only $100,000 is your money. You're taking out debt to invest the other $100,000, okay? That seems phenomenal. And that's why it's so luring, especially if you're someone getting great gains. I've gotten 30 to 40% returns for like 5 years straight. Of course, I'm like, oh my gosh, if I could have more money to invest, so let's say I had $200K at that time, then you can invest another $200K, now I got $400,000 in the market. And compound that, take that a 30 or 40% return, and tell me what you get. The problem is, that's not always the case. You can't always get those great gains, right? So that's the basics of what margin is. Now, where trouble comes in is when your stocks, let's say you got your 100K invested in another 100 on the debt, so the margin, right? When your stocks start to tumble, when they start to go down, the money comes out of the margin first, and then you get what's called a margin call, okay? Margin call. And depending on how heavy you are on margin will depend on when that margin call comes out. So if you're super heavy and your stock goes down a lot, that margin call is probably coming very, very soon, okay? And the issue I had was I wasn't working at that time because I thought I could be a stock market trader at that time, which I've always had success being a stock market investor. There's a big difference between being a stock market investor and being a stock market trader. Traders looking at things very short term, and that's not me. I always look at things long term, but that year, and mainly because of the margin, it forced me to get a short term mindset. Then, and you could say, well, Jeremy, what if you only invested 20K? That's actually what I started doing. I started going a little smaller in margin at first. But the issue is, it's so luring. It's like being in a casino for too long, right? You be in a casino for too long, you suddenly see this machine, you see that machine, and it's like, damn it, you know what? Maybe I'll just throw $5 in here, and then you lose, and you're like, oh no, I can get that back. It's so luring. It's ridiculous, guys. It's so hard to fight off. I got some amazing willpower. I could not fight it off. It just gets to the point where you want to invest it. You can't just look at $100,000 just sitting there and being like, no, I won't invest that, especially if you're confident in your investing abilities, right? So you get what's called a margin call, and then basically the brokerage forces you to sell, okay? They force you to sell, or they force you to deposit more money into your account, okay? So unless you had that more money sitting around to deposit into your account, then you're going to basically have to sell your position at a loss. And if you're someone that invests in stocks the way I do, if your stock goes down, me as an investor, I don't really care short term. But when you're on margin, you have to care all the time. Here's another huge issue with margin, guys. Remember I talked about this money? Well, guess what? You're usually going to have to pay somewhere around a 7% interest rate on that money, okay? So 7%. 7% interest rate, okay? So let's think about this. You got $100K out on margin. You're gonna have to pay in $7,000 a year in just margin interest. So, and of course, there's different rates. Like some rates, depending on your account size, you might have to pay in 10%, 8%. If you have a ton of money, if you have like over $1 million in the market, a lot of accounts you'll only have to pay 4 or 5. But still, you're basically having to get at least that type of gain per year to even make it worthwhile, right? So you're putting yourself in a situation where, damn, I have to get at least 7% a year. And let's keep in mind that the markets on average only go up about 7 to 8% per year. So basically, you're guaranteeing to yourself that you're going to at least beat the market every single year if you're investing on margin. Every single year, you're at least going to beat the market. You're not going to have any stocks that happen to go down, any things like that. Kind of unrealistic, guys. Kind of unrealistic. Sometimes you're going to get one that goes down for whatever reason out there. Maybe something you didn't foresee. Maybe some bad luck. Who knows what the reason is, guys. Same thing, you'll have some stocks that go up way more than you ever dreamed. That's going to happen sometimes. But that's a tough situation, and that causes you to get very much a short-term mindset rather than a long-term investing mindset, which is something I have, which I preach on my channel, right? Because now you're thinking, damn, I need to get at least 7% gain on all my stocks. Otherwise, I'm going to be losing money. Okay? Then you compound that with the lure of let's just go all in on margin or something close to it. Then what happens if your stocks go down? You get margin calls, guys. It's no fun. It's no fun at all. Now, when I first started on margin, it went good at first. It did. It actually pushed my account to all-time highs within about the first month or two of using margin. And then one of my stocks started to slip up. And then I started to go heavier on margin. I was like, well, this is such a no-brainer at this price. And it just happened to go lower and lower. Next thing you know, I had margin calls. I was forced to sell. And then I just started doing more and more activities that were short-term in nature, playing earnings calls, doing all this stuff that I don't do. That's not my style. And I lost money. And next thing you know, I had lost $100,000, guys. $100,000 at age 25. You know, that's like all the money in the world at age 25. 100K, like, come on, like that's insane. I look back and it's just insane. I don't feel sorry for myself because I knew what I was doing. I really don't feel sorry for myself. I knew what I was doing. I knew I shouldn't have been getting in that. And I still got in it, guys. And it was the greed that got me in the end because all I could see was, wow, all the money I could be making. The greed got me. Guys. One of the most important rules of investing. What is it? One of the most important rules of investing? Preservation of capital. Preservation of capital, meaning it's not just important about getting great gains. Absolutely, we all love to get great gains. Let's make more money, right? But just as important is not taking huge losses like I did that year, because that sets you so far back behind the ball. It sets you so far back. That's 100K I cannot get back. That's 100K that was lost. That money was lost. It was long gone, guys. And so for me, when I ended up getting down to a certain amount of money, I actually sold off all my stocks. I didn't invest in any stocks for at least a few months because I had to start businesses. Some of you guys probably know that. I started, my real estate marketing company was the main business I started. Then I started the financial education channel a few months later, and that just blew up over the past year. So I never expected this to become a business, but it ended up just working out that way. But, you know, it all worked out in the end. But at the same time, $100,000, guys, $100,000 at age 25. That's like all the money in the world. So that's basically the basics of margin. Margin is when you invest more money than you actually have. You invest debt. You have to pay interest on that, guys. Think about how idiotic that is even to do in the first place. Think about that, guys. Paying 7%. Some of you guys would probably be paying more than 7% because I know a lot of you guys have probably less than 100,000 that are watching this video. And usually the interest rates on those is like 8 to 9. Usually if you have over 100,000, it's somewhere around a 7% on most brokerages. Think about that, guys. That's idiotic that you are so cocky, you're so confident that, oh, I'm going to get at least 7% to make back on my margin money. And no, I don't have to worry about margin calls. No, because all my stocks are going to magically go up. Absolutely not, guys. That's just not the way the world works. So take it from me. Take it from me, guys. A very, very good investor. Don't ever margin trade. Trust me on it, guys. It's deadly. It's deadly. You have potential to lose so much capital. It is insane. So even if you're such a great investor, or even if you got all the confidence in the world, just don't mess with it. Take it from me. Don't even take it from me. Take it from Warren Buffett. Take it from the Oracle of Omaha, one of the richest guys ever in history, guys. Take it from what his opinion is on that, guys. If you want to invest more money, find some damn passive income stream, start a side business, get a better job, like figure out something like that your income goes up so you can invest more money. Don't just think of it as, I'll keep working my job or stop working or whatever and invest on brokerage money, because that's just going to be a losing proposition for you guys over the long term. And maybe you have some success in the short term. And I get some comments sometimes from you guys, oh, margin trading's not that bad. I just started a month ago. I just started 2 months ago and I'm already up, I don't know, $1,000 or whatever. Yeah, guys, anything can work out in the short term. I could go to the casino today and play some game that has terrible odds and maybe somehow win and then be like, oh, this is the greatest game ever. It's a losing proposition, guys. Trust me on it. I've been through it. And I love to talk about it. I don't love to talk about it. It's never fun to talk about losses, but I like to talk about it to you guys so you know what's going on. So, you can learn from me. You can learn from someone that's been through the game and been through the rigmarole, guys. So I hope you enjoyed this. That's margin trading for you. That's how I lost $100,000, guys. Just a messy situation. Just don't ever mess with it, guys. Trust me on it. Please don't. Please don't. It's just going to be bad for you. So anyways, I hope you guys enjoyed this today. Thank you for watching and have a great day.